You're watching HFO-TV.
Welcome back to HFO-TV. I'm Greg Frick, partner here at HFO Investment Real Estate. And today we're going to talk to Ian Formigle with CrowdStreet. They're part of the crowdsource funding space that we're seeing now in commercial real estate. Thanks for coming.
Pleasure.
Why don't you give us a little rundown of we've heard about it in the paper, we've seen it, haven't seen a lot of projects come on yet in this area, but kind of give it a little history on crowdfunding and where we are today from where we were a couple of years ago.
Sure. Okay. So the number one thing to keep in mind when it comes to crowdfunding and real estate crowdfunding is that, in essence, this is online capital formation. Okay. So this is a process that's been conducted forever, offline. Right? Friends and family, raising money, happens at multiple levels. And really what's happening now today is that the technology has evolved to the point where we can take that offline process online and do it in a scalable format with accelerated results.
Gotcha. Now, did this happen because of the Jobs Act?
Yes.
Okay.
Absolutely.
Got it.
So really kind of the catalyst events, like what's different today in 2014 than in 2010, for example? Well, passage of the Jobs Act in 2012 was a key event. That set the stage in two stages of how it pertains to crowdfunding. The first is Title II of the Jobs Act. That was passed in September of last year. Now with Title II, for the first time ever, online, so Reg D format, private fundraising can now occur in a public format. We call that general solicitation. So now you can advertise a project. The old ways of Reg D financing was relationship first, leading to deal flow second. Now it can be deal flow first, leading to relationship.
Gotcha.
So that was a huge landmark event. So, and that's all within the sphere of Title II. We're talking about accredited investors. Per the terms of the SEC, that definition is either an individual has an annual income of $200,000 with an expectation to do so going forward, a joint income of $300,000, or a net worth exclusive of their personal residence of $1 million.
Will qualify as an accredited investor.
That qualifies you as an accredited investor, and that enables you to invest online in a real estate project in a 506C format. That's the main difference. 506C being this new general solicitation method that's being conducted. That's what enables CrowdStreet to exist. 506B being the previous way that, that fundraising was conducted.
So the big difference really is the ability for you guys to go out and solicit these accredited investors.
Correct.
As opposed to them finding you or friends and family, which you've all heard about and all done before.
Correct.
Got it.
We can go out and publicly advertise, here's a great deal, here's a great sponsor, come and get it.
Now, one thing I had a question, because I hear about a lot on, we'll read articles, you'll hear this term crowdfunding. Are people just using that across the board for friends and family now, or what really designates crowdfunding versus just other kind of funding?
Sure. So yeah, as a name, crowdfunding gets thrown around and it gets extrapolated over all different segments. And so it is important to understand that as it pertains to real estate, this is not Kickstarter. This is not, this is not what, there's different elements of crowdfunding. One is, where it got started was rewards, right? Somebody has a cool product they want to bring to market and kick me down $100 and you'll get something when it comes to market one day.
Free beer if you're an investor in Willamette Brewing or something like that.
Exactly. Yes. So while that term has been applied to the real estate sector, it's very different. I mean, we were just talking about online investing, right? Direct investment into real estate equity and debt. So because it's online and it's managed in groups, we now fall under the term crowdfunding. But really what we're talking about is online syndication. Online syndication
for equity for various real estate.
Yes, equity and debt.
And are there certain projects that work better than others? Is it really just the sponsor? Like we've said for years, it's the product, location, good sponsor, good builders. It's probably the same thing, I'm assuming?
Very similar. So I would say in terms of CrowdStreet, our criteria begins first and foremost with the sponsor, right? We have a rigorous adherence to high quality sponsors, established companies. They know what they're doing. They've been in their markets for numerous years. They have a history of managing capital and delivering returns to investors. Luckily for us too, we have this. We have a downturn in our near-term rearview mirror. We can look back to that period and say, well, talk to us about what was going on in 2009 and 10. And odds are, if that period looks pretty good on their track, if they have a track record of being a stand-up operator in that period, we have a pretty good comfort going forward. Is that, look, the next time that things kind of get bad or go sideways, well, here's how that they behave then. We have pretty good confidence, and they're going to be a good steward of capital going forward. So that's the first criteria. Then we also look to different asset classes. Obviously, as it pertains to multifamily, for example, tremendously great asset class.
Right.
I would say if there's a single asset class within crowdfunding that multifamily sits on top, an accredited investor can understand it. They have lived most likely in an apartment at some point in their life. They understand what it's like to have a place in which I can live in a dwelling, walk down the street, go to a restaurant, go to a shop, be close to my work. That's kind of rolls up to the bigger macro study of kind of what's going on in terms of the U.S. urbanization trend. Right. And so, sure, multifamily is if there's one product type, it is the product type that they're going to adhere to. And then we also look at other product types as well.
So when somebody does, you find this accredited investor, they come in. Are they coming in for a specific project, or is it more set up like a fund that we've got $50 million now, we're going to go to various projects, or it's we're raising money for, apartment A, and we'll have another raise for apartment B?
It's a good question, and the answer is both.
Okay, you can do
so
both. Okay.
We are seeing both individual projects and we are seeing fund opportunities. And I will even say within individual projects, one particular type of structure that works particularly well are recapitalizations.
Right.
A multifamily developer, for example, who says, I have built and developed this project, it's now stabilized, I'm looking to replace my initial capital stack, which consisted of a construction loan and maybe some mezzanine finance, and I want to kind of stabilize my core. I still love this project and want to own and operate it for the next 7 to 10 years, and now I just want to have a nice, steady, stable, I can deliver a coupon, and I want an investor who understands and kind of believes in the long-term viability of this project. So that's also a great, recaps are a great opportunity.
And does the sponsor need to stay in, or the builder stay in through the term, or do you guys ever come in and you guys become all the equity coming? A little both?
Again, good question. So sponsors are always going to have some equity or skin in the game. That depends how much per project. Oftentimes we see 10% is kind of a good general over under. And so usually in the case of a recapitalization, maybe that's them having more and they're kind of selling down equity to kind of stabilize at that 10%. Right. There's a good example of a deal that's on our platform right now, which is that exact case. A sponsor who has a predominant stake in the deal that wants to stabilize at 10% ownership in the project, or in this case it's a loan. So that's, that would be a good example of kind of how sponsors look at our participation with them in projects.
And do you guys participate, you just brought up a loan, as equity and also a loan, so where you're actually in ownership and also just on the lending side as well? You can do both.
We can do both.
So you guys have wide open.
Very wide open. I think for us it begins with who's the sponsor and what's the asset and what's the need, and then we take the conversation from there. Is it a preferred equity stake? Is it a joint venture equity stake? Is it a mezzanine debt? Really, it's like if we like the sponsor and we like the project, then structure is something that we can talk around and we can find a solution.
Okay. And for investors coming into crowdfunding, is there a length of time? Is it kind of based on the project? Hey, this is a 5-year hold before we recapitalize. This is going to be a 10-year. I mean, what's kind of the turn on the money coming in?
Holding periods can vary greatly depending on who the sponsor is, what the asset is, and what is the business plan. In general, I would say right now with where crowdfunding is in terms of the maturation of this platform, in general, the shorter the holding period, generally the better. Okay. We're going to see levels of investors drop off. Once you get above 5 years, there's a drop off. Once you get above 7 years, another drop off. And you kind of max out, 10 years, we're now, nobody understands, nobody can project what the world is going to look like in 12 or 15 years from now. So if in general, if there's a sweet spot, 3 to 5 years is a really nice sweet spot for what investors are looking. They want to have some stability. They're looking for a yield, but they're also kind of looking to an end date of when do I get my capital back and what's a business plan that's going to generate liquidity within a reasonable time frame.
Right, and they can always reinvest back into another project. What are the yield? What are the yield expectations that you've seen, or has that changed in the last 12 months in regards to now you've got more investors looking for places to place funds? It's opened up. You guys are able to market to this group. What kind of are the yield requirements?
Sure. Well, so again, good question. And the first, the easy answer is, well, it all depends, right?
It all depends on the deal.
It all depends on where, depends on the deal, where is it located, what type of project is it, at what place in the capital stack do you want us to participate, in a preferred position or in a joint venture? Are we taking first dollar loss, or we have installation? I think what we generally talk about is that we're seeing a couple things. One is that guess what? Accredited investors are somewhat sophisticated,
Yes.
and so the returns have to be attractive. When we look at what I generally do is I try to draw a correlation to the institutional world and say usually when a sponsor comes to us, they know what that cost of capital is if they go to that one-stop solution.
Right.
If it's a mezz loan or a pref equity piece or just joint venture equity. And usually what we'll coach them on is that if you have a really good project and a good product to offer, and a good investment to offer, then what we're seeing is that access to the accredited investor is really our key value proposition.
Got it.
And for that access, they're willing to take a discount to what kind of the one-stop shop solution is. Call it 150, 200 basis points. There has to be some differentiation to the accredited investor. Say, hey, for $25,000, you can get to participate in this deal. If you're going to expect returns that are absolutely on par with the institutions who can write the $5 million check, right. Guess what? It's going to go to the group that can write the $5 million check. So give that sponsor a reason to open up this. Just give them a little bit of a carrot. Doesn't have to be huge. Just give them a little bit of incentive. And 100 to 200 basis points sometimes goes a long way in terms of overall profitability. Once also a sponsor is looking to promoted returns, right? That extra 200 basis point could really be extra dollars in their pocket at the end of the day if things go well.
Exactly. And then so for the sponsor looking at your group, you guys provide, I don't want to say, kind of that buffer between, now I've got 200 investors in my project as opposed to going that one institutional. So that's kind of one of the services I'm sure you guys are selling to these sponsors and they're looking for equity.
Yes, we have two different kind of formats when it comes to that. We can either offer them a route of which, if a sponsor comes to us and wants to embrace an online audience of new investors,
right.
we can be that source for them. And that's what we call the marketplace model.
Okay.
We have the deals that have been done on the platform to date have been under that format. Operator says, I really like the idea of growing an investor base. I love the introductions. I'm housed in this one location in this particular part of the country or this region. I really want to have some exposure to other markets which we have exposure to. Help me grow my investor base. In other circumstances, we have a developer, an operator who comes to us and says, my core competency is building product or acquiring and managing product. Investor relations and capital raising that is my weakness, and I don't want it to become my strength. So therefore, work with me and help me provide a turnkey solution. And in that case, we can say, okay, we will work with you in that format. We'll form an LLC. We'll manage it. We'll be your turnkey online capital partner.
Got it. And what about retirement funds for individual investors? I mean, can they roll their individual Roth IRAs into this? Are there restrictions federally on what they can put into these deals?
Sure. Online, in terms of self-directed IRAs, today, self-directed IRAs they totally work. Okay. We have, on the deals that we've done on the platform, have self-directed IRA investors in them.
They do, okay. Oh, good, so it opens up another avenue. And are you guys just based here in Oregon and Washington, or are you doing deals up and down the West Coast?
So in terms of kind of where is our actual footprint, so our headquarters is in Portland. We have an office in Bend. Okay. And we also have some what we call regional managers. So we have some affiliates of our company that are industry veterans, professionals who are out there in the marketplace, and we've identified some key markets. So we're growing a network. New York, LA, going to be in Dallas, Seattle, San Francisco, right? We're going to have these key relationships with boots on the ground. So that's kind of where our footprint is. And then in terms of where we'll do deals, we're a nationwide platform.
Got it. Okay. And what is the kind of sense or feedback you're getting from developers? I mean, it's a new source of equity. We had EB5, which has been around for a long time, but really kind of got front page news the last, I'd say, 5 years. I mean, I'm sure they're open to it, but kind of what's the questions they have, for our development clients, if we want to direct them over here, what are the questions they need to be comfortable with to move forward with you?
Sure. So I think for starters, I mean, because it's a new space, then there's curiosity, but then with that comes a lot of questions, right? There's a lot of help educate me on what this is, how it works. So for starters, if the sponsor wants to do their own deal, then we're educating and coaching them on what are the differences and nuances between a 506B offering and a 506C offering, which is what you're going to have to do if you come onto our platform, right? Because we are going to leverage general solicitation to market you your project. A lot of the questions center around kind of help me understand the process. How does it work? How long does it take? Kind of what level of confidence do you guys have in the process? So, time goes on, more deals get done. I mean, kind of time and maturation of the site of the business and the industry helps kind of solve those problems. But really, too, I think us, it's working with that sponsor. We can show them what our processes look like. We can show them what our technology looks like. And really, at the end of the day, it's helping them understand what this is, and that in some ways it's very different. In some ways, it's very much the same as what you're accustomed to. Right.
Just another, like I said, avenue to capital or equity. And,
absolutely.
Okay. Anything else you would want to point out, before we're done here on, for the audience, apartment owners, investors, builders? I mean, this sounds like a space that's going to continue to grow. It's new, but again, it's exciting with the ability for, somebody's got a 25,000, 50,000, could never get involved in institutional real estate.
Yep.
And hear about it, see it, but now, here's the ability for you to get involved. Anything else you'd like to say to the audience?
Oh, well, just a couple of things. One, so sponsors and for investors, I mean, we're your audience. We're your customer. We want to work with you. For investors, it's very easy. There's no cost and obligation. You can come onto the website, www.crowdstreet.com. In 1 or 2 minutes, you can be registered, you can be looking at deal flow. And for sponsors, there's also right there on the website, for the first button, Raise Capital. If you're out there, you've got a project, this is something that's interesting to you, we want to hear from you, we want to talk to you, we want to understand what you're doing and where you're doing it, and let's work on building a relationship. So again, click on the button. You can always reach out to us individually. Easy first way is to click on that button, fill out some criteria. That generates a prompt to us. We'll be in contact with you very shortly.
Great. Well, thank you for coming. I'm sure this is going to be an exciting space, and for everybody out there, I think you'll hear more and more about crowdfunding and crowdsourcing of deals as we see in the future, and we'll see you next time on HFO-TV.
Thank you.
Thank you.
Thanks for watching HFO-TV. To learn more about HFO, call or visit our website.